Hey guys, what's up? This is Andrew for TRENDLINES.com. I'm a professional trader and I'm here to teach you everything I know about technical analysis. So what I like to do is to use all my preferred indicators one by one and see the signals that they're giving me. So today let's make an analysis on AMC. Let's get into it. Alright guys, let's start on the 4 hours time frame as usual. So this is, the drawing I did on my last video. What is interesting is to see if yes or not this scenario, which is for now my preferred scenario, but of course when we're gonna have more data, this scenario would probably be slightly updated or maybe completely wrong. I don't know yet. I'm gonna keep these drawings and I'm gonna update it each time I have some new information. So let's start on the 4 hours time frame and let's quickly sum up what happened the whole week. I was basically, calling for some bullish momentum to come back, for some strong moves up since I had my breakout here on the 15th of April. And I was telling you that this looks like, to me, we are in a third wave, so in blue here, right? So on a longer time frame, we are in the third wave and we are just doing a 1, 2, 1, 2, and this should be a 3. So we are actually in the third wave. That should be impulsive and see and have bigger volumes trading. So the volumes are slightly increasing, but they are not big, guys. Same as for GameStop. Those two stocks used to have very strong volumes trading, even here in March. And it's just going lower, 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 all right? But the good thing is that the price action is going lower too, so we don't have a divergence in volumes. I mean, compared to the highest level we had here, if we had here a higher high and here volumes going lower, this would be a divergence. This would not be good. For now, this is just, a correction that is, to me, finishing, but we are not seeing the very bullish signals that we're gonna have in the third wave when it's gonna really start. But we're having it a little bit. So now if I go back on the 4 hours time frame, I'm gonna try to analyze if all that happened here is actually making my scenario changing. Do I need to update? So I added this now. I was like this, guys, all right? I was like this in my last video, and I was telling you that this is a very healthy ABC because, I was using fibs for those who have watched this video, and I was telling you that, above 50%, so the 1060 level, it was like this. All right, whatever, 1055 now I'm having, maybe, okay, 1060, it was like this. I was telling you that above 50% we are bullish. This correction ABC of this first move up in orange is actually healthy and normal, and this is what we are expecting in the third wave. And I told you that maybe we're gonna go to 1020, but I don't think we're gonna go lower. Well, we did go lower. So just by looking at the fibs, this is not good, but that's why I like to use ELLIOTT, guys, because ELLIOTT is actually more precise. It is going to use the kind of same reasoning of retracements, but it's not basic level using the golden number ratio, but it's actually depending on how the first wave was built. So here it's important to actually, let's go on the hourly time frame, and it's important to label this properly. All right, so let's do it together. I'm going to do the ABC later. All right, the 1, 2, 3, 4, 5 guys that I have here is kind of obvious. It's 1, 2, 3, 4, 5. Third wave cannot be the shortest, but it's not here the biggest. All right. The biggest wave is the 5th wave. So this is what is not usual in this first wave. I mean, it's fine. It is still respecting all the ELLIOTT rules, but you can see that the 5th wave is very strong and we're having a kind of unusual first wave. So why not having an unusual second wave? And I'm going to explain what I mean. Usually ELLIOTT wave counting is giving you 2 levels of potential correction for the second wave. Either we are correcting to the top of the third wave, which is here, as you can see, 1065, and it's actually working better than fibs because you can see that the 1065 level on the hourly time frame was the support level. It was not 1060. So ELLIOTT was correct. ELLIOTT or trend lines, this goes together, but it's actually the top of the third wave that was supporting the price in the move down. Then it broke and we actually now went where? Okay, the 4th wave is actually here going to 980. So this is actually my level, the situation would be very different. Once again, it can also happen that 1-2 waves are just doing something like this. You can have almost 100% of retracement and still it's going to be valid. But guys, we are in the third wave. Why not having this in the first wave, but not in the third wave? So here, if you go below the 980 level, my scenario would need to be very different. Now, let's analyze this second wave deeper. So we always do the same thing, guys, checking what information the market is giving us. So here, A, B, and C. And here, when I do things like this, because I was seeing an ABC like this, guys, but actually the C wave has been longer. But C waves always contain 5 waves. So let's see if we find 5 waves here. You know, ABC is 3, 3, 5. You're going to find different information about that. In the book, I found 3, 3, 5, and this is what I see in the market. So I need to find 5 waves here, and it's interesting to notice that I actually have my 5 waves. This could be the end of the second wave. But once again, for the second wave to be finished, as usual, guys, what is going to give us the signal? This trend line, right? This trend line connecting the highs of this ABC. And let me put it in orange. So this trend line, guys, this is what you're looking for, all right? If you day trader, if you want to buy AMC, for example, so of course you can buy the dip, but what I suggest, what I like to do, my method is actually to buy the price when it's starting to go higher. So here, the typical situation, if this is correct, if actually this ABC is finished and I have 5 waves here I have 3 waves, here I have 3 waves. So this is kind of a typical ABC. I should have here something like this, all right? So we're going to break it, then retest it, and then we're going to go higher. So this level would be on Monday, 10.25. If we see AMC trading around 10.20, 10.25 on Monday, like let's say after 4 or 5 hours here, just for the time period to be filled, then we would have another signal that the second wave is complete, and we're probably gonna have some more bullish signals coming. So for now, this scenario is still my preferred scenario. And one more thing I like to do, guys, is to try to see if I have any divergence on the short term. Because once again, here we are bullish. This is kind of obvious since we had this breakout. Since 8, we are bullish. So if we are bullish and suddenly the price action is supposed to shift, then most of the time we having some divergences. So let's see if we have any. Because if we do, then we need to keep this in mind and just accept that we're having some bullish signals and some bearish signals. So to do that, let's start on a 4 hours time frame. Very quickly, let me show you what is a divergence. I like to talk about divergences this past days because this is more complex tool than I usually show you guys, and I think that most of you are ready to see it. So we are looking for this because now we are in a bullish development. So we're trying to see if something is telling us that we are bearish, all right? This is what we need to look for to be professional and to really do the technical analysis job properly. So we're looking for higher highs, MACD going lower, or lower highs, MACD going higher, all right? This would be bearish. So let's see if we have it. Once again, very easy, guys. I'm here to give you some tips, guys. So looking for divergences may seem difficult for you, but the way I do it, there is nothing difficult. You know, you just connect the highs, connect the lows, and check what is the MACD doing. Connect the highs, then check the MACD, connect the lows, check the MACD. Let's do it. I connect the lows first, and I check the MACD between here and here. So here is the 30th of April, 13th of April, the MACD is here, and here, it's now. So market making higher lows, MACD going higher. So no divergence, all right? It's the same direction. Now let's do the same exact thing with the highs. So it's going to be the same thing we check, but different days. So between the 15th of April this time and the 27th of April. All right, 15th of April, we're here, and 27th of April, we're here. So market making higher highs, MACD going higher. So no divergence on the 4 hours time frame. Now let's, really check everything. Let's go on the hourly time frame. But on the hourly time frame, we're already bearish. So we are here, we are bearish because this is bearish. So the MACD is going lower. The market is making lower lows, lower highs. and no bullish divergence on the short term. So here we cannot check this. No, we can only do it on the 4 hours time frame. You understand why? On the hourly time frame, I would be here looking for bullish divergences, because on the hourly time frame, the momentum is bearish. You can see the MACD is going lower. So here I'm looking for bullish divergences that I don't have for now, because MACD is going lower, market making lower highs, lower lows, so no divergence. So for now, there is nothing that is telling me that the market is going to bounce back, except what I did before, using Elliott wave counting and using my trend lines. So to conclude on this, my preferred scenario is still valid. We just corrected a bit deeper than expected. We are waiting for more volumes, guys. All right, this is crucial. This is what we need to see. And if we break the 980 level, you know, this is not a third wave. Definitely, this could only be something weaker than a third wave. So then we would need to reassess the analysis, and we would probably go on the WXY correction, something like this. All right. Okay, so if we don't have here a third wave, it means that we're having something like this. This is the alternative scenario. That is for now not on the table. That is for now not my preferred scenario. Everything that I see here, even if we had some weakness on Thursday and Friday last week, is still showing me bullish signals, and the bullish case that I have here is still my preferred scenario. So guys, that's it for me. I hope you enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button, so you're gonna be the first to know when I upload anything new. And stay close to shore. I'll see you guys.